So mortgage rules are changing to give first-time home buyers more time to pay back loans. It's meant to help. Some say it doesn't because it only applies to newly built homes. CTV's Michael Couteur takes a look.
We're changing the rules of the game.
The government is putting a big push behind what many call a small change to the mortgage rules. First-time home buyers will be given 5 more years to pay off an insured mortgage for a newly built home.
That translates to lower monthly payments, so more younger Canadians can afford to pay that monthly mortgage on a new home.
Right now, a $500,000 home with a 5% down payment would mean a monthly mortgage payment of nearly $2,800. Extending the amortization period by 5 years would lower monthly payments by about $240. So will it help more young people get into the housing market?
Very little. Honestly, it's not going to move the needle.
Mortgage specialist Frank Napolitano points out Canadians continue to deal with an affordability crisis.
Interest rates that are still pretty elevated, and young Canadians that are struggling to come up with down payment without the bank of mom and dad's.
The new policy also only applies to new builds.
All of it, if one wants to buy a new condo or pre-construction condo, it can take years for that. So it's probably not for everybody.
Robert Ogue says the federal government has put a focus on increasing housing supply. However, some builders believe the key is to get all levels of government on the same page.
If you want to build affordable housing, it can't be just one, it has to be everyone has to get together, and they have to work together, and they're starting to, but they're just not there yet.
While the federal government has taken a number of steps to address the housing crisis, many in the industry say real progress won't come unless the Bank of Canada lowers interest rates even further. Michael Couteur, CTV News, Ottawa.